The latest numbers from the Canada Mortgage and Housing Corporation are in, and they show signs that the rental market is slowing down in the Halifax area. But affordability remains an issue for many. Lukas Jasmin-Tucci is an economist with CMHC and has been compiling the numbers. So, sir, advertised rents for new listings, this is for 2 bedrooms now, down more than 4% compared to this time last year. Can you help us put that in perspective for us? Or are we starting to turn some kind of a corner here?
Yeah, so those are asking rents. So this is the rent that you would see for apartments that are available to be leased. So this is not representative of the market as a whole, but if we compare the beginning of this year to last year, the asking rents are a little bit lower than they were because demand is slower. It's a bit longer to lease a new apartment. So because of this, the rent that are asked or suggested are a bit lower than they were.
And so why is demand down a little bit?
The main reason is that the population is not growing as fast as it was before. That's because there were changes in policy regarding immigration, and because of the fact that when people move in general and there's immigration, a large portion of those people will tend to go to the rental market. If there's less people that migrate towards a region, we will see that there is a decrease in demand. So this is affecting a portion of the market. So when we look at the market by different segments, by rent ranges, we see that the most expensive, maybe newer apartments, they see a little bit less demand. And this is where we see a reduction in pressure. But then when we look at the rest of the market, in older buildings, we see that there's still a lot of demand there. There's still pressure. So this reduced population increase is not affecting the market as a whole yet.
And so then what can you say, if anything at all, about how or what this means for affordability in this market?
We've seen that there's this change in trend that started last year, continuing this year. Probably that rent cannot increase as much as they used to before because we've reached some kind of a ceiling. The capacity to pay from renters is from tenants it has reached capacity. We see it when we look at a measure of this, for example, would be the rent to income ratio. So what proportion of the rent paid is to the total income. It has increased rapidly, especially during the pandemic, and this is decreasing slightly this year. So it might mean that we've reached this limit where tenants cannot pay more, even if the cost of maintaining a building is increasing quickly. This space cannot be kept.
And so what does this say, or what might this say about supply? And could we see new construction slow down as well then, if we're seeing that change in the population?
So in the last years, we've seen a lot of new construction. It takes a lot of time to from the start of a project to the end. There was a gap between the number of starts and the actual completions because of the time it takes to build those. Right now, we're seeing a strong increase in completion. We've seen more than 1,000 units, rental units added to the market since the beginning of the year. So that's a record. And with time, all those units that were started in the last years will come to market, will add to the supply. And that's another factor that will relieve pressure along with a slower demand.
Okay, so you're looking at the Halifax picture there, and that's what we're talking about when we're looking at these numbers. But how much can you extrapolate this information, this data, to other parts of Nova Scotia, perhaps?
So the data we have in the latest report is focused mainly on Halifax, but what we can say is that the migration numbers are valid for the province as a whole. So this slowdown in demand, it's true in Halifax, but it's true also elsewhere in the province.
And so then what are you expecting to see in the coming months? Is this a downward trend that is likely to continue?
last year we noticed that there was this change in the market. It's continuing right now, and we expect that this trend will continue towards the end of the year, probably next year. So when we do our next measures of the vacancy rate, we expect that it will be a bit higher. So last year we measured it at 2.1%. We expect it to be a bit higher in October when we do our next survey.
All right, we'll see how that all turns out. Mr. Jasmin-Tucci, nice to talk to you today. Thank you very much.
Thank you.